Welcome to the European indices for the 10th of November, and starting with the DAX here on the daily chart. Well, we've had some news push the markets, most indices around the world, up a little bit sharper than I expected. Not within the normal flow of things, but certainly in the direction that we've had. And we're looking for, like the S&P and the DAX and the FTSE and the Australian market and others, that we're looking for wave 1 to the upside with a wave 2 correction coming into play here. For the DAX, of course, we're sitting at a major level, which is the 13,000, so we're going to see a little dance above and below that. Technically, from the low to the high here, the 60 or the 50 and the 61.8% would be roughly the top there for the 50, and 61.8% will be a little bit lower there, but we can check on that. But in the bigger picture here, we're certainly looking at a bullish trend in this instance. So we really want to catch this wave 2. Now we need to be open-minded because it may not pull all the way back down through here. Yeah, we just got to be a little bit careful. But this, if the market doesn't pull this far down and we see a setup on the 13,000, well, then we'll take that, and we'll talk about that too. So let's just drill in to the intraday chart, so the 4-hour chart. So let's just get things, the shell of the perimeter, so to speak, into play here. So that's the 61.8% here. Now we just start with that, of course, and we can take this, just copy this. So we're looking for an A wave, B wave, and the good thing about wave 2s is that they are, I'll just go to the hourly chart, I think, here. So for wave 2s here, normally they're quite simple. They're normally sharp and simple. So normally we would be looking for 1, 2, 3, 4, 5 waves down for the A wave, 3 waves for the B wave, and 5 waves for the C wave here. And then we can move up from that. So, in terms of, you may have even been long from this point here, so you really need to exit at this point. You know, when I look at this structure, I'll just go to the 15-minute chart. I've got an alternative count for the US market, so it's a good idea to have a look at. So we've talked about being long here, we've talked about being long here. So, I mean, if I was trading, I would be exiting at the 13,000, but looking at all of this structure here, I think we also need to look at it in terms of, you know, we don't want to have our minds fixed that this is actually going to pull back. Now, if it does pull back, then that's fine. You know, we know where we are. However, what happens if the market pushes up? What are we going to do then? Well, the first thing that we can look at this point, a little bit messy in here. I can see we've got 1 and 2 and 3 and 4 and 5 here for this, but we really need to see this market, if I can just, and it's likely that we'll get a bounce off here, right? So I'll just put that in, and there's probably a second bounce as well. But what you want to look for the downside is you want to see that retest there. Now the retest may not fail, it may just continue up at that point, but just below that, 1 point below, then you can look to go down further. I don't particularly like trading against the trend, but if you're scalping, you know, and you know what you're doing, just then that's fine. So realistically, this would, at this stage, we would look to go long above this high here. So we just need to put that in there. We need to talk about this, so because we need to be on the right side at the right time. I mean, normally we would look at this high, but we can bring it down to this high. Now, if we get a bounce off the 13,000 here, let's just pretend that we do here, or something like that, then later on we can bring it down to this high, but only once it comes back down here, of course. So we can just keep bringing it down above the level. Once it locks under the level, then we're in the short-term trend to the downside at this point, because we're still in the short-term trend. Well, we're in the, well, it depends how you look at it, really, isn't it? It's if we go to the daily chart here, we've got the long-term trend. I don't know if you call this a medium-term, well, probably long-term trend. This is probably a medium trend, and this is a short-term trend, I guess. You could define that in terms of moving averages as well, your 50 and your 100 and so on and so on. But we don't particularly want to trade against the trend if we, because it obviously is quite bullish. So we just need to be a little bit mindful of that. But just going back to the 15-minute chart here for a moment. So let's just see if it locks under here, and then the idea is to, basically it's pulling back down to the 61.8%. Well, that's our kind of target. It might only go to 50%, it might only go to the 12,500. In a lot of cases, the first thing that we do is we put in our levels here, which is always work backwards, but so 1, 2, and 3 is group 1, and the next level up is number 5. So these are just the Fibonacci numbers as a price ratio. So 1, 2, 3, 5, and then 8. And then when you come to 8 here on the downside, this is group 2. So 65, 72, and 80, and then the midpoint here. So that midpoint and that midpoint are the same. So normally what we see, the first thing that we expect is the market just naturally, that's its swing range within that price point, group 1 above and group 2 below. With group 1 here, it can trade a bit higher, but if it finds tested support on top of the 300 on number 3, just call it 3, then the market's going to push up to the 5 at that point. So it can spike up here and drop back, but we normally, when this market's moving up here, if you're moving above a level, you normally find that 1, 2, and 3, they're kind of like filters which slow the market down and then pull it back down to that point. And so that's where we are at this point. So I'm not sure if we should count this as 1 and 2 here, and then 3 and 4 and 5 down to this point. But the S&P's got an easy count, so just follow on that for the time being. If the market does move to the upside, there's plenty of space in all of this to look at this count here differently. Now, I've got a different count on the US market, so we could easily just, well, I won't go into it at the moment. We'll just stay with what we've got at the moment. This is quite strong here, so we could sort of bring that into the third wave, bring it into a third wave picture, but I won't do that just yet. We'll just stay with what we've got, and we'll also just have a quick look at the FTSE as well, doing the same thing as well. This is just the 1 hour chart here, and we were looking at this as 1 and 2 here, and 3 and 4 here, and then looking up for wave 5 at 6,000. So it just popped up before, a bit unexpectedly, out of its natural sort of worming through time and space in its little range here. It popped up, so we're going to have to put that up into this space. But like I said, this is kind of acting like a third wave here, so I can see it without too much problem pushing up higher from this point. But once again, we could, in this case here, would normally look to go long across the top here. We could also bring that down a notch as well, which I'll do now and just color it in with pretty pictures, pretty colors. So we could bring that down to this little notch just here for that to go long on top of the 2 there. But otherwise, we'll just see it drift down here in 5 waves. Such. Just wanted to dislocate that. So it'll be something like this here. So anyway, we'll pick this up. We'll just monitor it for a little while. What really interests me in all of this is this wave 2 here. And like I mentioned, wave 2s are a zigzag pattern, and they should be 5, 3, and 5, and they can pull quite deeply and quite sharp into a 61.8% retracement level. But I'm not so much interested in that particular target. I'm more interested in just counting the structure down, which we will on the S&P. So this can come down to this level here for this. So we'll keep an eye on that. But yes, don't go losing money in this, because we'll make the money in this one, in this third wave to the upside. This wave 3 going up here should be longer than wave 1 here. So that's pretty exciting. And the other point here too is that what makes it good is that because we got 5 waves here, that means it will get another 5 waves over here. So we didn't know that before, but we didn't have that data before, but now we got that data. We analyze it and say, well, we've got 5 waves in this move. That means we're going to get another 5 waves over here. It's going to be wave 3, so it's going to be this length here plus another 61.8%. So all good stuff. So yes, I got this wrong here, but we're just going to put that up there. We're just going to be looking at so this level, the levels here are quite important. So let's just assume for a moment this drifts back into, into the 6,000 and below here, has some sort of ABC correction here. Then to the upside here, if the market drops below the 6,000, we want to be building, we may get it lower than this, just depending, but we just to make it a bit easy here, we want to be adding on 6,000. We want to be adding on 100, 200 and 300. We want to be taking some part profit at 6,500, the medium level, and then we'll look to get back in again on that other side over there for that. Alrighty, thanks for tuning in. Cheers.